Hi friends, this is Subhendu from Logical Investing with Subhendu, and today I'm going to talk about a stock which is into plastic extrusion machinery creation. Now you might be thinking, Subhendu, what is plastic? Uh, plastic extrusion. So I will talk about the concept. What is it all about? I will also tell you about why this stock looks really attractive to me at this level, and we will talk about the nature of business. We will talk about why I picked up this stock. But before we get into the details of the video, I wanted to tell you that the purpose of creation of this video is not to give you a buy or a sell recommendation on that stock at all. This is an educational video so that I tell you what was the reason behind I picking that stock, and if you were to look at similar stocks, what are some of the parameters which you should be looking at to evaluate or analyze a particular stock. So please treat this video as an educational video. Please do not take any buy or sell transaction call based on this video. Please do consult your financial advisor, or also do your own due diligence before you even take a decision to get into that stock. Now, I intend to create this video just so that you learn from the various you learn the various concepts behind stock picking. How do we look at different organizations and so on. Now, whenever we have taken a decision to buy or sell a stock, there has to be conviction in it, right? We have to be really sure, because sometimes we will buy a particular stock at, say, whatever rupees, right? And then markets can go up, can go down. It can be sometimes some positive news comes, stock rises up. Sometimes some negative news comes and the stock goes down. Now, if we have analyzed the fundamentals of the company well, then we have that conviction within us to hold on to that stock and do not sell in panic, because whenever we sell in panic, we will incur a loss, right? So we will so creation of that conviction within us is really, really important, and this is the intention of this video, to understand what are some of the factors which would help you to gain conviction in some of the stocks which you are picking, right? Now, that's one. The second thing which I wanted to also say was, never put a huge amount of money into any one stock or any one investment type, right? I mean, we all know that never put all of your eggs in one basket, and so that's the same principle which we have to apply here. Any stock, and one other thing which we also have to look at is, whenever we are investing new, we are getting into the market new, we should not take any large bets. Never. We should not take any large bets, because we never know which ones of those will actually go down, which ones will go strongly up. We have invested in the business of a company, or in the stock of a company, by analyzing its business, looking at its fundamentals, and but you know there is nobody can predict the stock markets, the exact value of the stock markets, of where the stock will go. So risk diversification is really, really important, and we have to ensure that, as a newbie into the market, we should put in small amounts of money, and into the theories, into the concepts which we have learned, and then pick up the stocks. And once we have picked up, we have to have conviction to stick along with them, not panic sell, or whenever it goes up or down, and so on. Okay, so having said that, so the next important thing which I had to also say was, if you have not already subscribed to the channel, please do subscribe to it. And if you have not liked the video, please do like it, because your likes and subscribes do encourage me a lot to come up with new such videos, right? It takes a lot of effort to dig out some of these hidden gems, to find out what really stock, how do you analyze stocks, and how do you pick up stocks. So I would really appreciate if you could do that. Okay, now, having said that, I wanted to talk to you in this video about why I picked this particular stock, and let's get down to it. We will just we will just get to the name of the company. It is called Rajoo Engineers. So Rajoo Engineers is a company which is into creation of plastic extrusion machinery. So I picked up its I picked up the credit report from Screener, where it also talks about the overall business, what is the business into. And but before we get started with that, I wanted to quickly tell you what is plastic extrusion, right? So plastic extrusion normally is a high volume manufacturing process where a polymer material, okay, enriched with the desired additives, is melted, and formed in a continuous process. So what it basically does is, for packaging, for when you are packaging a food product, for example, the Tetra packs, or when so they have to be in a particular shape. They have folded. The food has to be packed in it, sealed. The shape, it has to be created by machines. Now, every package is different, in terms of its size and shape. So when specific machines needs to be created to create that package. So now Raju Engineers is into all of that. It creates the extrusion machinery, which does all of the things. If you look at the different range of products which Raju Engineers have, you have pandemic hamper, mono and multi-layer blown film lines, mono multi-layer sheet lines, thermoforming. We will talk about all of this in a brief, not a lot of detail, because these are very very technical, and I'm not from this industry, but I would like to tell you about the applications, right? So from the applications, we would know that if you see, the applications of these machinery can be found in flexible packaging, can be found in agriculture industry, can be found in infrastructure industry, can be found in automobiles, food and beverages, pharmaceuticals, white goods, stationery, and so on. We pick up any one, let's say flexible packaging, and we go there and we see what exactly are the products which Raju is creating for each of these, right? So let's look at this. Fabrics, flexible packaging, agriculture, infrastructure, pharmaceutical, stationery, and printing. So if you look at some of these, machines out here, you would see that these are different machines for different setups. They create different molds. Sometimes it can be a hard mold, it can be a soft mold. You have a heptafoil, pentafoil, five foils, lamex, multifoil. So there are different setups which Raju Engineer creates and gives to different organizations. Now I was looking at the con call, the scripts, which says that today. We are one of the leading plastic extrusion machinery manufacturers in India, with nearly 35 years of excellence in the extrusion industry. The company is based in Rajkot. Raju Engineers had a modest beginning in 1986 and has emerged as an undisputed global player in blown film, sheet extrusion lines, thermoformers, extrusion coating, and laminating lines. So these are the different product lines which they have, and which makes the company really attractive. Now we will go and look at Raju Engineers and in little more detail about their products and about their innovation center which they have set up. They were the first company in Asia to start a R&D center for customers, enabling customers to test run products, offering total customized products. The company unveiled extrusion coating and lamination machine as a post-extrusion process, right? And then they have a strategic partnership with Bozano and Figley, Miaf Machines BV, Commodore Technology, Wonderpack, right? Around 60% of their business every year is generated through repeat orders. Now, this is very important because, given the nature of the business, once the clients like the kind of products which they are getting, repeat business increases. With repeat business increasing, the overall impact on margin has a positive impact. When you have more and more repeat customers, you spend less and less on your sales and marketing expenses, and so that definitely is a big green tick, right? And then they have clients like Uflex, Reliance Industries, Indian Oil, Beaniwad, Sugi International, Synthetic Packaging Industry, Abhinav Industries, SG International, and so on. Now, if you look at the geographic revenues which they are getting, outside India is about 60%. Right, in India market, they have about 40% of the revenue coming from Indian market. Now, they have talked about the merger. They have talked about joint venture with Buzano, R&D. Now, most important part to look at is this: the company's focus will be to use in-house and better technologically equipped facilities for innovation and excellence in business. One thing we must always understand that whenever the company invests in R&D, whenever the company invests into creating innovation in the products which it is producing, there is a non-linear, proportion or non-linear relationship to the revenues it generates. Because the higher the innovation, you can charge a premium for your services, for your products, and that's the key. And because they were the first ones to probably build, as they claim, the innovation labs for this business, they continue that legacy, and then they have, they are continuing to invest in technology for innovation. Now, if you look at the second point, which says the company's focus will be to add new products like extrusion coating, multi-station thermoformer. Now, what exactly is a thermoformer? We started look at, what are thermoformers. Thermoforming is a manufacturing process where a plastic sheet is heated to a pliable forming temperature, formed to a specific shape and mold, trimmed to create a usable product. Now, the important part to notice is that this is mostly automated. Now, what that basically means is, as more and more automation comes in, creating and adding more products that are automated and need lesser human handling, which ensures that your operational efficiency goes up, right? The company's focus will be to increase penetration in existing key markets of India, Latin America, Asia Pacific, and the Middle East. So this is where the company stands as of today. Now, let's start looking at, what are some of the stats about the company says. The market cap of the company is 182 crores. If we look at the reserves, they are almost 77 crores. The current price of the stock stands at about 29.6. Book value is about 13.5. So probably it is just trading about almost 2 times the book value. Right. There is the returns on capital employed for the stock is about 20%. Return on equity is about 14.1%. The important part to note is that the stock is trading at about 16.5 PE when the industry PE is at about 32. Now, what that basically means is there are multiple other companies in the same industry which have much higher PE than Rajoo Engineers, giving it the. I mean, we can definitely infer from this that there is room for upside which is there. We will start looking at what are the other peripheral indicators which also help us conclude that there is still room to grow. We will get there. Now let's look at the Altman Z-Score. The Altman Z-Score stands at 4. Now Altman Z-Score is an indicator of financial strength of the company. If the Altman Z-Score is more than 3, it means that the company is financially sound and stable, right? And the financial health of the company is good. And now there is another indicator which we also are going to look at, which is the PEG ratio. Now the PEG ratio we will look at is the price per earnings to growth ratio. So this is the PEG ratio. And what is a good PEG ratio? A good PEG ratio, as a general rule, is any value less than 1 suggests 1 or less than 1 suggests that the stock is fairly priced or even undervalued. A PEG ratio above 1 suggests that the stock is overvalued. Now, these are theoretical concepts, but looking at the numbers, we absolutely see that the PEG ratio is less than 1. So we are looking at a stock which is undervalued right now. And then there is room for growth. Now, if we start looking at the overall, earnings per share, we will go back and look at it in detail. We will start looking at the promoter shareholding a bit, and then we will move on. Now, if you see that the overall promoter shareholding in December 2018 was 65.8, that has fairly remained constant. Marginal improvements or increase in the promoter stakeholding 0.04%, in June quarter, and then that has been consistent. FIIs, we don't have any. Initially, there was some bit of holdings, but then now we don't have. DIs, we don't have. The rest amount is being held by public, which is about 34.15%. Now, if we start looking at the charts of the company, we would see that the price has been fairly constant. I would say that at the beginning of the year, we are looking at a 1 year horizon, and within that, the company's price has probably was at about 17.56 in January, and it is about 29.6 as of today, which is 7th January 2022, when we are recording this video. So probably around 50, around almost near 100%, it is trading. Now let's look at a 3 year horizon. If you look at a 3 year horizon, then you see that there has been a rounding bottom pattern, and then the stock has recovered to its peak, and then it is forming a handle. So if you consider this as the cup, then there is this handle formation which is happening, and now this is a very bullish reversal pattern. If you look at the amount of volume which has been there in this half, in the first half, and then the volume which is happening now, the accrual is happening at all of these levels. Accrual is happening at about 13.57, accrual is happening at 22.65, accrual is happening at 31.75 levels as well, which clearly leads us to believe that this stock is definitely going to see a huge rally. But again, my sincere request to all of you is to understand the logic why I picked this stock, yesterday when I did pick it. But this is definitely not to be construed as any buy or sell advice, everyone, because this is just to understand how do we analyze what is it that we are looking at while we are analyzing some of these stocks. Please, if you are taking any call, to get into the stock, take a position, please do your own due diligence, and also consult your investment advisor before you take this call. Now, if we look at a 5 year horizon, that chart even looks better. So there is a perfect rounding pattern, which is where the low was around June, where it hit about 6.79, May 2020, and then it is on its way back up. If you look at the max, then you would see that the all-time high was about 58.35, where the stock is trading right now is at about 29.6. So this is where we are. And if we start looking at the earnings, right? If you look at the earnings have been, kind of up and down. And then from this time, from June 20, earnings have been consistently on the rise. And you see the P has been consistently coming down. I feel that at this point in time, we are looking at, a very good up move in the stock, provided the earnings continue to keep momentum and continue to grow. Now, if we start looking at the positives of the company is a debt-free company. It does not have the debt equity ratio stands at 0, so that's a very very positive thing. Company has reduced debt, is almost debt-free. Company is expected to give a good quarter. The best part is the debtor days have improved from 40 to 27.24 days. Now, company is reporting repeated profits. It's not paying out dividend. This is kind of a con. But then for growth companies, they want to reinvest their profits into the business so that they can grow faster. So I don't think this is really a con. The company has delivered poor sales growth of about 7.34% over the last 5 years. This can be better. This definitely 7% growth can be higher because the industry is definitely growing faster. So this is one area which, if we see that the sales growth picks up, then automatically we would see a huge appreciation in the price of the stock. Company has a low return on equity, 9.7% for the last 3 years. Now, if we start looking at, the peer comparison in the engineering space, and you see that you look at the market cap, and look at the sales, you see that the company is almost doing the same quantity of sales as their market cap. So there is a huge potential, for the market cap to undergo a revision, a positive revision. Now, if you look at the quarterly sales numbers over the last couple of years, if you see that, they have been fairly consistent. A little bit of, as we saw that the sales growth had been at about 7%. So you would see that from 30 crores in December 2018 to 37 crores in September 2021, there has been ups and downs through the way. If you look at the yearly sales, you would see that the numbers started growing from 73 up till 111, 145, 100. Then there was a slight dip from 122, came to 93 last year because of COVID. Every industry was impacted. Packaging industry, of course, was impacted. And then in March 2021, they have increased to 152, which is their all-time high sales. And then TTM is 168. So they are yet again going to post a massive year in terms of sales. They have already exceeded their overall sales numbers for the last year. If you look at the operating profit, it had started at around, operating profit margin was about 9%, 9, 7, 9, 6, 9. And if you slowly look at 2020 was an aberration year, so we'll ignore that. 15%, 12%, 12%, 11%. So they have been fairly consistent, and they have grown from about that 9%, 7, 9% levels to 11, 12% levels, which clearly says that the operational efficiency of the company is on the rise. And I'm very bullish on a company which is trying its best to make the most use of the system. Now, it is not surprising that they are investing a lot in innovation. They are investing a lot of technology into their R&D, and no wonder why their operating profit margins are continuing to see a positive increase. So that is what I would say, that the company looks good from its operations perspective. The sales numbers, are at 7%, but if they are able to do more sales, then then the numbers will definitely look way, way better. Now, if we start looking at the net profit, you'd see that the net profits were hovering around 4 crores, 4 crores, 3, 5, 6, 12, 8. And then this was the, I believe, this was the March 2020, which was the lowest ever in the entire history of the company. That is the reason why the stock also, dipped by quite a bit. And now, if you look at this year, March 2021, it was 10. TTM stands at 11. So they are going to post their highest ever net profit annually, which would take their, the EPS currently stands at about 1.79. The all-time high EPS, earnings per share, was at 1.96. If so, these numbers are definitely healthy. They are definitely healthy. The company had been paying dividend, in the early years at about 22, 30, on an average about 30%. Now, in the last 2 years, there has been no dividend, but which is okay. Now, if you start looking at the overall reserves of the company, you would see that even though the business was, the sales were down, the profits were down, the reserves have gone up marginally in last year also. The reserves of the company in March 2010 were about 15 crores, which has grown over the years to 77 crores in September 2021, right? And if you start looking at the other liabilities, they have also increased, but but they have increased from 26 crores to 75 crores. Now, the total, if you start looking at the cash flows, which is, we are always focused on, there are three types of cash flows which we see: cash from operating activities, which is the core business of the company; then cash from investing, if there is some investment expense; cash from financing, if we have taken any loans, or if we, then are we getting, how much interest are we paying? That is the cash which is actually going out of the company. So if you see, the cash from operating activity is hugely positive. There was 1 year where it was negative here, but then in March 2021 also there has been positive cash from operating activities. Net cash flow also has been fairly, in the last couple of years, 2 years, there has been negative, but then overall, that has been a positive net cash flow. Now, one thing to note is that this cash conversion cycle, if you see last year, because of COVID, this was an aberration. If you really look at it, 2018, they had about 133 days, which was increasing to 155. it increased to super high level of 261 days, which is very high. And then March 2021, we could see that the numbers were back to the year before COVID. So the numbers look good. The ROC stands at about 20%. Working capital days, the number of days in which the working capital, is rotated or is back in the system is 52 days. It has significantly reduced from the previous year. So we can see that some of the company ticks the right amount of boxes. I like this stock a lot because of one simple reason. If you really look at the price, at this price point on 12 January 18, when the stock was trading at about 58.35 on 12 January. If we start looking at the P 2018, the PE was hovering around 42. So the price per earnings was at 42 when it was at its peak. Now the PE is hovering around 16.4. So now there is significant amount of room to grow, and that too when the company is looking at a year which is going to surpass its overall sales. So it will become a year of highest ever sales, and it will become a year of highest ever profits, as is evident from the TTM values which we just looked at. With such kind of numbers, I feel that the stock definitely should touch higher levels from where it is trading right now. Again, my sincere request to all of you to understand this video from from an analysis perspective, right? What are some of the areas to be looked at? Now, there can be multiple factors to also look at. As the consumption increases, as the industry grows, as we start consuming more and more products, which I do not feel that consumption is going to come down in a country like India. There will absolutely be a lot of consumption. So with all of that, the need for the machines which Rajoo engineers is creating is absolutely going to have a high demand. So that need is going to go up. So having said that, I feel that there is a better future for the company and of course for the shareholders. But again, please take your own do your own due diligence and then only take a call to invest. Now, I hope you like the video. I hope you like the analysis. And if you like the video, please do like it. Please do subscribe to the channel so that I'll be motivated, encouraged to come up with more such research and come up with more such stock ideas. Thank you so much. Have a great day.